Good afternoon, everybody. Thanks for joining us for the JS Mindset Weekly Call. My name's Denny. Today is Saturday, September 12th, 2020, and on the call today we have Jim Sinclair, Bill Holter, and Dave. Think about all the things for which your respect is diminishing. It's not just politicians of both parties. It's not just Washington Press Corps. It's not just our institutions of higher education and political indoctrination. It's not just the leaders of our largest publicly traded business, and it's not just our mainstream medical community. Moreover, it's not just about the talking heads of the evening news, nor is it about the editors of national newspapers. It's not about central bankers. It's not just about the leadership of our largest financial institutions. And it's not just about our entertainment industry in Hollywood. Our respect for all of these people and institutions, it's a fraction of what it was just a year ago. And it wasn't that great to begin with. The point is that American people are figuring it out. And each and every week there are more and more Americans seeing pretty clearly that those people and institutions we used to respect are nothing more than, they're nothing more than self-serving, self-righteous, elitist cliques that have so little regard for the average citizen that it'd be hard to discern it in any way. We're subject to two tiers of justice, two tiers of rules. We're subject to two tiers of opportunity and access to public debate. We're subject to two tiers of access to financial markets, and all of it has moved us from a three-class population base, one with a formerly powerful middle class, and we're moving very quickly now to a two-class population of only rich and poor. It's the stuff of an Argentinian drama that stars the likes of Juan and Eva Perón. An economy of opportunity and growth seems like a distant dream right now. And the question is, how in the name of holy goodness do we make sound investment decisions in the midst of this societal and economic chaos? So here we are on Saturday. We get the opportunity to ask questions of Jim and Bill and Dave. As always, before we get to those questions, be aware that in our conversation today with the boys, it's pretty important to remember we're not giving anybody investment advice. What we're trying to do is share our own personal perspectives of this economic world. You can choose to add it to your own perspective. You can choose to ignore it. In the end, of course, we want you to be prepared for what might certainly be some pretty trying times. Bill, nobody wants the stock market to crash. Nobody. Everybody has a stake in the illusion of a vibrant and growing stock market. Well, maybe not everybody. There are our enemies from outside and from within that would prosper so handsomely if it all fell apart. But you know, MOPE, Management of Perspective Economics, has just about run out of energy. As of today, we are 52 days, Bill, away from the election. I'm guessing that they'll keep it together that long. Bill, is it possible? Can they keep it together that long?
It's possible, but I think the point, I wrote an article yesterday, and I guess the underlying point or what was in the back of my head is they're going to, the enemies are going to try to take this thing down and crash the markets prior to the election. One of the reasons behind that, and we talked about this early in 2017, is that President Trump should never, ever have taken ownership of the stock market. So tearing the stock market up obviously makes him look bad. It scares people. It may sway some votes. But if you look at the playbook of the left, a market crash would fit right into it. I mean, they're torching cities. Why would they not try to torch the stock market? And I mean, you've got, just pick one name on the left. Pick George Soros. I mean, the guy knows what he's doing, how to do it. You saw what he did with the Bank of England back in whatever it was, 1992 or 93. And on top of that, the markets are so overvalued, I don't think it would be that difficult to tip the thing over and get a domino train wreck happening. So my thought process is, obviously, I don't want to see the markets crash. I don't want to see total chaos. But I think that it's doable. There's certainly motive, and the setup for a market crash is right here. I mean, you've got interest rates at all-time lows. They can't go lower. The shorts have already been run in, and you have valuation levels that are stupid. So I'm just going to say it's better than a coin flip. In my mind, it's better than a coin flip that markets crash prior to the election.
Jim, gold has been down since it broke through 2,000 a while back. I'm told that this is healthy for gold. I'm an old chartist, and I'm not sure it is, but long-term investors haven't budged from their positions. So I'm figuring that the sellers right now are the weak-handed ones that are just trying to raise cash for whatever reason. It's still pretty clear that we're headed for more inflation than this country has ever experienced. Ever. Jim, can you lay out the roadmap for gold the way you see it over the next 6 to 12 months?
Well, I think what you've seen is a natural phenomena that exists in markets, that round numbers are extremely difficult to penetrate or to hold. And you got to go back to the big market in 1968 through March of 80, and the cry on gold as gold was reaching above the 800 level, above 850, 887.50 in fact. The cry was gold was headed for 2,000 everywhere. So the number 2,000 was such a popular number amongst the gold bullish group, which was really at that point in time the majority of the market. That 2,000 is a very significant goalpost for the gold price. So when you add two things together, one, that it was a subjective area of resistance. That's where everybody had expected it to go. Not objective because it didn't get there, but subjective. And on top of that, it's a round number. And if you take a look at gold or even the major high flyers, you'll see that they build on attempts to penetrate round numbers. And normally they're thrown back 3 times, 4 times, 2 times. But they are thrown back. First move through 2,000 to a pro trader was an absolute sell. I mean, it just was, because that's the way it works. And that's the way it has always worked. And therefore, those people who make up algorithms must take into consideration the reality of something as simple as a major round number. Now, I don't, whether something is healthy or not, I think for the bull it's healthy when it's going up, and it's not healthy when it isn't. But as far as a market acting in a manner that you could expect it to act, in a manner in which the stone professional would say it should act, is being proven by the fact that gold, even though it's put down, never fails, even almost daily, to show show a little muscle. And I firmly believe that gold at 2,000 was extraordinarily underpriced, and I do think that what we're looking at is a move that's going to take place in an extremely short period of time, when in fact it happens. That gold is going to go to a price from a Friday to a Monday. And although before that there will be a lot of evidence is about to happen and gold will be trading much higher than the levels we're talking now, the move in gold is the kind that if you're not in it, you're not in it. You missed it. So I have no concern, nor do I think that what's happening in the market now is bearish. I just think it is normal. And normal means it's expected. And normal means it's highly professional. And normal means one shouldn't be concerned by it. And if that's what people then think is a definition of healthy, fine, so be it. The healthiest price for a bull is a rising price. But what's going on right now is textbook common to the professional trader. And that's my answer to your question, Teddy.
David, a few weeks ago, I believe I was speaking with Jim at the time. We talked about how a country has to pay for its day-to-day operations. Only three ways, Dave: taxes, printing money, or through selling debt instruments, bonds. Dave, this week our budget deficit for the year is already at $3.1 trillion. Nobody's going to raise taxes. And I don't know too many people who are going to buy bonds, and yet I saw that some 30-year bonds of the U.S. traded this week. But at these low interest rates, from my perspective, Dave, the only thing that's left is printing more money. And there's a big loser in all of this, and that's the American citizen. David, I tell everybody you've got your Ph.D. in the economics school of hard knocks. So I'd appreciate what you think all this is going to mean, Dave.
What we talk about every day, the dollar's not going to be worth the paper that it's printed on, Denny, and we're going to end up in a situation where, you were sitting here and we're talking about, these states are, they aren't running their budgets right, and, that's not our problem, and, so we're going to sit here and argue. I thought we were the United States of America, but nowadays it seems that we're the divided states of America. I'm not saying what – let me put it this way. They have to raise taxes because you can't cut services. Anybody who's traveled abroad, if you take a place like Sweden, take a place like Switzerland – I watched construction there. I watched things being done there. And I would talk to people and say, very expensive hinge, very expensive door. The bottom line is over there, things were made to last. Here, that was not the name of our game. We were just going to print money and keep spending and keep spending. Well, that's what we've done. So at this point, there is no other alternative. I mean, there is no alternative. What do you let each state go broke? And as each state goes broke, if we are the United States of America, the damage that happens in one state obviously is going to be reflected in the other 50 states. So obviously we have to print the money. There is no other way. And, when you say, can we sell bonds? You can, as long as the institutions that the Fed backs keeps buying them. But again, we'll end up with what's the dollar really going to be worth? Which leads us to a post that Bill had put out earlier this week. Why would China be buying commodities with U.S. dollars at the present time and stockpiling them? I think that's the answer to the question. So if the states can't print their own money, then the federal government's going to have to print the money. It's just how it's going to work. I mean, it doesn't matter what party is in office. I just don't see any other way. You're going to lay off all the garbage men? So now you have garbage on the street and rot, and we'll all get sick and die. We could say we're going to defund the police, but you can't defund the police. One, it's ridiculous. So then who's going to stop crime? And if you don't have a mechanism to stop crime, then you don't have a functioning society. They're going to print the money, and the dollar's going to devalue, and that's basically the thesis of my investments for the past 20 years is the dollar's going to get devalued. And that's what I've seen happen over the last 20 years, and I don't expect it to change.
Bill, this week I cleaned out some things from the basement, and I ended up selling some things to a friend of mine for $40. Billy, this is where the story gets kind of weird. In the old days, I'd take this over to his house, and he'd give me $40 in cash, 2 20s, 4 10s, whatever. In other words, there's a cash transaction. But here's where it gets really weird. My buddy says, Denny, do you have Apple Pay? To which I said, nope. He said, do you have the Square? He said, that thing you insert in your cell phone for a credit card transaction. And I said, nope. He said, do you have Google Pay? Nope. I said, Steve, what about cash? To which he said, nope. I said, what about writing me a check? He goes, nope. Bill, in the end, he sent me $40 through PayPal, and I got this email, and I'm still trying to figure out how to get that frickin' money into my bank account. And PayPal has a lot of bells and whistles, and I'm not sure I'll get the job done. But my point is this, Bill. what is the transactional economy going to look like for those of us looking to transact in cash or silver dimes or gold coins or something similar? Bill, I felt like an old man, but where's this going?
What you just described is how we were told, I think it was just about 2 years ago, this time of year, of how business was going to be transacted on Mars. And,
I remember that one.
Yeah, let me explain what I'm talking about. Jim has talked about back to basics. Started talking about it, I think, in 2016 and really throughout 2017 and then since then. The financial system is going to come down. So this friend of yours who has no cash, does everything electronically, lives in a virtual world. And that's what it looks like our world is heading toward, is a virtual world. Meaning we're going to have digital currencies. Central banks are going to be issuing crypto digital currencies. And that's probably what the future is. But, and this is a huge but caveat, between where we are now and where we're going to get to, there's going to be a time where none of that stuff works. I mean, if you have brokers, you have the markets closed, you have banks closed, you have the system has failed, none of that digital stuff is going to work. So it's going to be, we're going to go backward in time 50 or 100 years, where you take a silver dime, you have 64 and earlier silver dime, and trade it with your farmer for a dozen eggs. You're going to eat. I mean, if you have that mindset and if you're prepared for that, you're going to eat. The people that, like your friend that can't write a check, can't do cash, but he can send money all over the world digitally, he's not going to eat. And I don't want to get too in-depth in this, but it's going to be a massive, massive shake-up. It's going to be a massive, reawakening for people that, or not reawakening, but a huge awakening for people that don't understand how business was done when we weren't back to basics, but when it was basics. So, I
thought the only thing left was a barter. What do you got that's worth $40? And I guess that's at least we have.
That's
options.
What I'm saying.
Yeah.
Yeah, that's what I'm saying with your silver dime, or you want to buy a car, you give them a quarter ounce of gold or whatever. Whatever is accepted. Whatever is accepted, that's the price. And I think people are gonna figure that out very, very quickly.
Well, I truthfully thought I was on Mars, or at least in the Twilight Zone, because I'm thinking, wait a minute, did the world get ahead of me here? I mean, all I want is $40. But
right.
That's the drama of selling something out of your basement. David, I'll tell you what, I'm going to go to Jim first. Jim, a listener question came through to us. Bill sent it on to me, and it's all yours. Financial advisor Lynette Zhang has recommended holding no mining shares in the market because of the potential for a crash in the market, or even the possibility of the destruction of the stock markets entirely as we know them. The listener wants to know, based on that if that occurs, would the mining shares simply implode with the market as well? So, and I guess the ultimate question she has asked is, what will good quality mining shares be worth if the market implodes?
Well, they'll be worth their gold. All right. In other words, the shares will be valued more as a non-leveraged coupon for the physical gold in the ground, less the cost of mining. And the ability to figure out the value of a gold share will become much easier than right now when there is no traditional metric out there to value it. It's one of the problems it's had. They're trying to value the manufacturing companies. Now, whenever they whenever the naughty house or bawdy house was raided, they also, and the police took everybody out, they took the piano player with them. Well, the piano player is just trying to earn a living by making music, and that was the only place he could get a job, so he really wasn't committing any crime. He was just in the wrong place at the wrong time. For a period of time, if markets imploded, they would affect all shares for a period of time. Then there'd be a sorting out. And it wouldn't be a huge period of time. We're talking days, a week. But then there'd be a sorting out as to what was being thrown out. And there are so many EFT potential problems, so many involved like GLD, which you don't want to read the original perspective of prospect, because you'd make yourself ill. There's so many things that could cause the price of gold to move up geometrically in that environment, that at first, everything goes. When a market crash, and just like in '29, then it straightens itself out, and home stake starts to leave the equities, meaning gold is a king. It will happen again, more or less just that way. So the reader is correct, but the idea is break from where to where. If you wait for that event to take place before making your commitment, it may be multiples of what the present price is today, and the drop in the share might be 20%. Let's say in an extreme case, that might be 50% higher or 100% higher than where it is right now. It's better that you have your investment set, and that you look at gold shares in terms of the physical they have, the mindset of the management they have, the amount of gold they have that is mineable, the politics of the environment in which they exist, and the individuals involved and their skill sets, and make your decision that way. But so it's a wonderful observation. It is a correct observation. It's a useless observation, because it's not going to help you right now or then to sit around waiting for that event to take advantage of it, because you're going to be paying a much higher price than generally exist in gold equities today. Is that clear?
That was a really good answer, Jim. That was
Hey, Denny, let me chime in just a real brief on this one.
You bet.
Understand, and I don't like to talk bad about anyone, but understand.
I'm sorry.
Not you, Jim. Come on.
Understand that Lynette Zhang works for a coin dealer, and she is talking her book.
Well, that makes a lot more sense.
In other words, if you were going to do 2/3 in metal and 1/3 in mining shares, don't do the 1/3 in mining shares, because you need to do the business through me. And that company that she works for has, they are not a broker dealer. So that's my comment. She's talking her book.
David, the delivery of silver to the commercial industry is really getting tight. I try to watch the commercial deliveries. One of the leading suppliers of precious metals has stated that they cannot deliver a 1 kilo bar, which it's not huge, but it's a kilo bar of silver, can't be delivered until January of 2021. I think they said mid-January. Another dealer has said that the 5 kilo and 15 kilo bars that normally go to the commercials are at least 90 days out for shipping. So we're in September. That's at the end of 2020. Dave, wouldn't you think that when the commercials start really scrambling for materials for their own manufacturing processes, it's bound to create some major shortages in the retail markets too? Again, you're my PhD in economics here. What do you think?
Well, I think you're 100% correct. And what you're talking about essentially is a failure to deliver. Because if I need to, let's say we're talking food. I need to eat today. 90 days from now, I'm starving to death. So essentially what you're telling me is the store is empty. Essentially, you're witnessing what I would call a failure to deliver. And you can't deliver in a timely fashion is the way to put it. So how much of a premium should there be on physical presently? And to jump back to the question about mining shares, I'm not familiar with the article or the video or audio, whatever it is that Lynette had done. But again, where does the metal come from? Where does the silver come from? You know, obviously silver's had a really good move. If you look at some of the junior silver companies, some of the good ones are up over 400% since March. So what you're seeing here is you're seeing people starting to realize that the metal only comes from one place. And if these companies are trading for sub-dollars to $1.50, it takes chump change to make a major position in a lot of these companies. So, you know, you get these shakeouts here, Denny, and what you're doing is you're watching the shakeout of the weak hands while somebody is on the other side catching these falling juniors and literally buying them for $1 a piece. And since each of these companies only have, you know, 100 million, 150 million, 200 million shares each, how hard would it be for a handful of major hedge funds to pick up all the pieces of this and find themselves in control of a major portion of the junior mining industry? So, again, market crash, anything could happen. But you're witnessing a market crash in juniors for the past 10 years. Mm-hmm. It's already occurring. Is my, you know, just my street thinking, Denny.
Hey, Denny, let me pop in on that one too.
All right.
Dave, you're right. The mining shares, I've always told people, think of mining shares as the bank or the central bank that actually creates money, because that's essentially what they're doing is when they dig gold or dig silver out of the ground, what's their product? Their product is money. So at some point in time, and I think this Jim had touched on this earlier on, at some point in time, the mining shares are not so much going to be viewed as, you know, what's their cash flow. They're not going to be viewed as a widget maker. They're going to be viewed as how much gold or how much silver do they have in the ground.
Absolutely. Agree 100%.
I agree entirely, because they become a non-leveraged substitute for the physical, and maybe the only place you're going to get physical from.
Right. And one other thing on the question of non-availability of silver, all I will say is it's starting. And that is where you would see it start first.
On the commercials?
On the commercials, yep.
Non-availability is the key, because all of this hangs on the concept of the leverage that exists between paper silver and paper gold and the real thing. And every time when you talk about difficulties in the supply, you're really talking about the failure of the exchanges, the move towards metals being evaluated by the physical, not by the future. And you're talking about really what is the basis of the fiat currency system falling out from it, and the reactions. Then gold is that, silver is that, and falling out from underneath. And the reaction on currencies is a reaction where none of them become storehouses of value, and you enter into everything you need going through the roof and everything you don't need going through the floor. So you've got a different kind of hyperinflation caused for a different reason.
And Jim, the commercial use, I'm not talking about gold now, but of silver, when silver gets pulled out of the ground, pretty much 70% of it is used. So it's not so much the investment aspect of it as it is the industrial, technological, medicinal, et cetera uses. And if this continues and all of a sudden they go out 4 months, 6 months, and all of a sudden, we can't get it. Well, what that does is it totally blows up the fallacy of there's plenty of metal around.
There isn't.
It means that they've burned through. They've burned through the stockpile.
Yeah, and this idea that you can leverage via this warehouse of exchanges 1 ounce of silver or gold against a piece of paper totally falls apart.
Or 500 pieces of paper.
Yeah, it totally falls apart because you can't. And in history, that type of leverage has never been able to be sustained. And with the financial system we have now, so overstrained by debt, the probability that what you're discussing will occur is almost absolute.
Jim, this is the last question I have, and then I'll open it up to all of you for other perspectives. This is a great question, and I have to admit that one of the things it brings up is something I'm not totally understanding. But here's the question from the listener. Jim, regarding your $50,000 projection of gold prices, I saw an interview you did where you suggested that it could be a binary event. I was wondering how you see it unfolding. Would there be a large market price appreciation before the binary event, or could it be quite the opposite where the paper manipulators put up a last stand and force as many weak hands out as possible before a binary event? Okay, so first things first, what is a binary event in this situation, Jim?
Straight line, okay? It is by itself sustained. Binary event is a Friday to a Monday change in price up or down. And that is going to be an ingredient of the final price of gold in the rally, which most likely no one has to call a high or ever sell. The fight, I feel the price will be fixed by the market, not by government, not by law, not by edict, but by market. And I think China and Russia will be the major traders who will make the market 50,000 bid, 50,000 offered. What do you want to do? And the market is going. Gold is no rose garden. Okay, it's never been an easy place to be in. It's and the violence that we're going to see in gold and silver has only started. We haven't even scratched it at this point. It's going to make the violence you saw in the major equities look almost kindergartenish. The first reset will be the great play to keep gold somewhat under control, but it will rise to a price which is palatable. And right now, people talk 2,000, 3,000, maybe more. And in time, those levels are going to become not as extreme as they sound now. But the big move will be the second reset, because this is a situation of, as Bill has outlined and David, of debt and disorganization. The combination means that there's no PhD out there who's going to develop a system that's going to make everything all right out of the foundation of the wreckage we have right now. In fact, there's no knowledge of where to go from here, as the Keynesian approach towards economics is totally in the outhouse as a result of the fact that we're at negative rates, meaning that you can't pump an economy by making money cheaper. And the whole business is you have to get business going in order to have a pleasant environment. So, that binary event is going to be, I'm more than likely a Friday, Monday, but it could be a Monday, Tuesday. It's going to be in the marketplace itself. It's going to be brought about by long-term action of China and Russia, in which their activity in gold has not been based on economics, but based on political policy. It will work out economically for them. But their ownership of gold is not to buy it now and sell it at $2,500. Their ownership of gold is to control a monetary system when there isn't any, and to develop and to be part of the market or influence that creates the second reset after the failure of the first. The first will be money you can spend on Mars. And, it will be what you saw with the fellow that asked you if you had a little square so you could run his credit card through your telephone. That's why I have respect for some of the people who talk about cryptocurrencies, even though I don't think the things they're working with have any more worth to them than a dollar bill does as a storehouse of value. It will be a favorite of the geeks for a period of time. What we're really looking at is, it can be another acronym if you want. We get out of the system wasn't a bad idea. MOPE, in fact, developed to be called just that, and developed into a system that entered into the business schools and was taught as economics. All of your governments, central banks, and operators of economies now had adopted that as being the infallible way. And it is today. There's a man who believes he'll be reelected president if he can keep the market going. What is that? MOPE. And nobody has looked at negative MOPE, which is certainly to follow positive. When the markets go down, people aren't going to feel too good about investing in things. So there was one of our listeners who identified only as RS who came up with a pretty nice idea, though I've modified it some way. He said, how about ASAP? Okay? Adjust your supplies and asset production being an acronym for the present situation we're in and what we have to do. And I talked about trying to define the Cook Island Trust to our listeners, and Bill went a little bit ballistic on it, and I thought, oh, geez, he was right. Of course.
How many emails did you get?
I can't count them. Okay?
I only got about a half a dozen. So I thank the listeners for not pounding my email, but I did get some toward the end of the week.
I know you sent them to me. Hundreds of pounds, hundreds of pounds. You rubbed it in. So the answer was a lot. Okay? But every time I got the bright idea that I could write somewhat of an article as a letter explaining the function of the Cook Island Trust.
Hey, Jim.
Yeah.
Jim, if I could suggest, I'm going to mention this so that listeners can hear it, but when you do write that article, explain to people that this is not for somebody with 100 or 200 ounces of gold. I mean, it's going to cost, just to get a lawyer to draw this up, you're talking probably $25,000.
Minimum. Minimum. Okay.
And you're probably talking carrying costs of just the trustee of probably $10,000 a year.
Absolutely.
So this is for very higher net worth holders.
And you have to understand it's not a vehicle to commit a crime, because today every check, every money transfer that goes anywhere has a tail on it, because it goes through the SWIFT system. So nobody can get on an airplane with suitcases full of $100 bills and not have somebody open them up and confiscate the money because they didn't declare it. And it will open up anybody doing it. There's 3 federal filings that they don't have to do now that they must do or would commit a crime. So
and also, Jim, it's not going to help. In the U.S., if you want to put stock into an international trust, you've got to do that offshore because there are no brokers in the United States that will open an account for an international trust. And the reason I know this is because I did an international trust. Dave and I did it together, and no broker, and I was a broker at the time, I was a branch manager, and even my firm would not open the account.
They won't even open it for an international person, let alone an international trust.
Right. So this is primarily for real assets.
Well, I 6 times threw away the letter because every time I did it, I said, my God, I'm talking law, I'm talking accounting, okay? I'm talking investment management. And all of those require certain licenses, tickets, examinations, and
which you don't have.
I'm stepping outside my boundaries, okay?
Yep.
6 times I did this. I took up 3 nights. And the right answer is all the information anybody needs, or people listening to us now all have computers or know at least how to use a browser. Put the word Cook Island Trust in your browser, and the stuff that will pop up will be mind-boggling. It is the strongest of what it is, but it is outrageously sophisticated. And right now, there is no way to hide assets. You can only put them into highly complex and expensive trust forms that will separate you from the money and therefore separate people from making the money away from you because it isn't yours. This is just that simple. But if I attempt to explain that, it's not the work I'm a hard worker, but if I attempt to explain it, I'm looking for a lot of trouble because I know probably 10 or 20% of the people who are asking. And they know me, and they could call me up if they wanted to. But to write a piece on that or to write a letter on this is only looking for a lot of trouble you don't need because people will misuse it, and people who shouldn't use it will try and use it. It is minimum $40,000, and if you get it, if anybody offers it to you cheaper, watch out. It probably is a scam. To do it right.
Hey Jim, I've never said this to you before. But I told you so. That's why I cringed last week when you wanted to talk about it.
Are you two married? See, that's what a wife says to a husband.
No, he didn't. He didn't. I thought he was going to scream at me before. That's why I said I apologize.
Yeah.
It was getting worked up before. You're absolutely right. You're absolutely right. It's a wonderful thing, but it's impossible to explain to people and not step out of your boundaries of what the law allows us to do, and that's why we're not investment advisors. Sorry,
okay.
Guys, I tried.
You were a good man. The roads to hell are paved with good intentions, and I think you just learned it.
Yeah, very well.
All right, David. I don't have any more questions for y'all. Is there anything you want to share, anything that struck you this week, Dave, that you'd like to share?
Yes. We're supposed to be the 50 United States of America. And are cities and states fiscally irresponsible? Hello, where have you been? What are we talking about? This isn't a surprise. So there is only one real solution. First off, we can't have a civil war because nobody benefits from that. No matter what side you're on, there's no winners in that, destroying society. So the only alternative, if you were sitting at a business table and had to make it, okay, so what are we going to do, boss? Well, we're going to do what we always did. We're going to kick the can down the road, and we're going to print more money, and we're going to keep promising people things, and we're going to, keep this airplane flying with duct tape on the wings and hopefully glide it in someplace in an inflationary environment where we could kind of make this problem go away, kind of like Weimar Germany. Because, again, we're supposed to be the 50 United States of America. Can't be, well, this state's a loser and that state's a loser. I would like to say almost all the states are losers. They constantly promise more than they could give their people. It's why, again, the price of gold has gone from $275 an ounce 20 years ago to $2,000 an ounce now. Because in the beginning, as Bill and I would talk about, it's math. What else is going to happen? Sure, we're going to have, bombings along the way and disruptions here and there. Ultimately, this is a money printing game. It has been. That's what the central banks have done. They've indebted everybody, and now we're going to just deflate the currency. So to me, it's simple. Hopefully, you're learning something. For the simplest things is, again, I've had a couple friends who are just working guys, actually lumberjacks. And I don't know, maybe 10 years ago, I convinced him every month to just buy a couple silver coins. And he's been doing it for probably 10, 12 years. He's more than happy. So it's that simple. It doesn't have to be, you don't have to be a jillionaire. You don't have to have millions. You just need to be the richest man in Babylon. And every week, go buy your 2 silver coins. That's it. Only thing I can tell people.
Yeah, it is that simple and that right. Okay? All of these long discussions we get into, is highly technical market or otherwise, all boil down to that statement. That is called back to basics.
Billy, do you have anything more?
Yeah, a couple things, I guess. And this is, I guess you could call it.
I'm sorry I didn't listen to you.
You could call this comedy. This is not really business. As I understand, there have been some weeks where there's been background noise. So I need to apologize because on weeks that I don't do interviews, I don't shave. And that was my beard. I always shave religiously on Sunday. When I go to church, I shave. So we do these Saturday afternoons, and if I didn't do an interview during the week, I didn't shave. So
you mean to tell me all this time, Sasquatch, that was your beard on your phone?
That was my beard on my phone.
Oh,
and the only place Bill takes his hat off is church.
I have been
point.
with him, and that is true. That is true.
Another thing, I'm proud to announce, and my wife explained to me last night that I got to actually be doing it in order to call myself a farmer, but we've got 2 greenhouses planted. We'll see how it goes.
You've got 2 greenhouses?
Yes.
You've planted inside the green. Oh, look at you.
Yeah.
Look at you.
Well, yeah, Farmer Bill.
Be prepared for the drones to fly over from the the drug cartel. They want to make sure you're not a competitor.
Then my wife had the great idea. She wants to do a portrait of her and I, like the farmer with the pitchfork and his wife.
Oh, what a great idea!
So she told me I got to go out and buy some overalls, and she's gonna do the Zsa Zsa Gabor look. She's gonna put on a lot of jewelry and a white, blonde wig, and so it should be an interesting portrait.
It was Green Acres, and it was
yes.
Lisa, Zsa Zsa Gabor or Ava Gabor, and Eddie Arnold.
And Eddie Arnold, right?
All right, that's sort of funny. That house. The name of that painting is called American Gothic, and what a lot of people didn't know is that the house in the back was a house of ill repute. So hopefully you don't have that on the farm too.
That was probably the chicken ranch.
The chicken ranch. All right, Jim.
Which is only about 30 miles.
Guys.
The chicken ranch is close. I'm sorry. Go ahead, Jim.
I said this is a G-rated show, guys. Come on.
Okay. Well, Jim, you're the last one. Have you got anything else you want to share?
Yeah. Whenever Bill tells you something, listen to him. Even if you doubt it, it probably is going to happen. That's it. Okay? I learned my lesson.
Well, I feel the same way about all 3 of you. David especially. David's like a hand grenade with a delayed fuse. You pull the pin, and then about 2 months later, the grenade goes off, and then you remember, didn't Dave talk about this? Didn't Dave talk about this on Saturday? So to all of you, thanks. To you, the listener, thanks for listening. I do appreciate you reaching out the way you do with questions. We had really good listener questions this week. If you have more that are not standard, when is gold going up and what's the stock market going to do, you know that those are beyond our purview. But if you have some questions of some depth that you want us to explore, we will certainly do that. As always, I encourage you to take a look at jsmindset.com. A lot of great stuff posted there. And finally, the reminder that money's not everything. It's just that having money makes things so much easier in life. Don't forget it's the people in your life that are worth $1 million, and you just can't forget to tell them so. With that, we will see you next week. Same time, same channel.